Hello, everybody, and thank you for joining us on this happy Friday, July 29th, the last Friday of the month. Next time we see you on Monday, it'll be August. Summer's halfway over. It's gone way too quick. For you parents out there, I'm sure you're wishing summer was, over today, and the kids get back to school. But listen, on a serious note, we need to start off with some important news that's going on out of South Philadelphia. We didn't want to bring it up, but it's important to us. If you're a Philly cheesesteak fan, there's a bunch of different restaurants in the Philadelphia area that are quote unquote famous for Philly cheesesteaks, but to me and a lot of others, there's only one, and that's Jim's out of South Philadelphia. Currently, what we're seeing here is Jim's is on fire. It was established in 1976. It is rated the best Philly cheesesteak out of any Philly cheesesteak in the world by many people. And apparently the flames are under control. It's been 4 hours. About 150 personnel arrived to try to put this thing under control. But Doug, I want to go to you and get your opinion on this whole cheesesteak disaster that's happening in Philly, because I know you like Philly cheesesteaks as much as I do.
Not as much as you do. Come on now. But with that said, I mean, Pat's, Geno's, those are tourist traps, right? I mean, this is a legendary kind of old school place. How do you think the smells are from that area right now, by the way, with the fried
Let me tell you, everybody's apartment in that vicinity is going to smell like the best Philly cheesesteak for months. They won't be able to clean it out. It's going to be great. I wish I could get an air freshener that captured the smell that's coming out of this place.
Supposedly, though, it was the air conditioner that started to smoke there, and that's what's causing the fire. That's what the early word is. But no one's hurt, thank God.
No one's hurt. I know it has nothing to do about crypto or Bitcoin or the markets, but this was just this was painful news today to hear about it. I love Jim's. I literally eat my weight in Jim's every year, and if any of you know me, I'm getting bigger. So it's a big deal.
Yes.
And I'm just glad everybody's okay. All right, let's get back to what we're supposed to do. Going back to the markets today, we're up over $1.1 trillion today in total market cap. Obviously, we've had bullish sessions throughout the week. We have a little simmering going on right now. Bitcoin spending a lot of time on the overnight yesterday in the $24,000 range. Now at 23,892, a little under that. Bitcoin daily sentiment remaining neutral but slightly bullish with a 58 out of 100. And Ethereum settling in right now around 1724. But it is very bullish on the daily sentiment with an 85 out of 100 coming off the Trade the Chain platform. So like we spoke about in yesterday's video, we have the whole trade that into the merge that we've been looking at and analyzing as we close out this month and go into August in preparation for that somewhere around September 19th merge completion. You can see the hottest on Twitter. We have Oasis Network. Oasis Network actually was a client of Doug and I back in the institutional days when they first started. They knocked on our door and said, "Hey guys," I think this is back in 2017, Doug, to be honest with you.
Yep.
Yeah, when they started Oasis Network, and they said, "Hey, can you guys be our fund administrator?" We were like, "Okay." They are up 499% on social. Price action up 24.15%. And then Ethereum Classic. I don't even know why we bring up ETC. I mean, Liz Kuka, the head of Ethereum Classic Foundation, she's a friend of the show. She's been on here before. But no one really talks about Ethereum Classic that much. But it is leading, some of the charts here. 283% up on social, but the price action for the week has been even more phenomenal than that, up 150%. So little nuts there with Ethereum Classic. It's like the little engine that could. Top price gainers for the 24-hour period. We have XVS 41%. Oasis again rose. Is their ticker 24%? Rose again on the most bullish coins. XRP sitting in the middle of there on the most bullish coins of daily sentiment. And oddly enough, we don't see this quite often, but on the bearish daily sentiment, coming in second place is ADA Cardano with a score of 30 out of 100 on bearish daily sentiment. So that's interesting. The market's right here, the 1 hour price chart down there with the little green, mostly green looking graphs. Showing good. 1 hour change is slightly up for a lot of the coins. The majority of them, Solana there up 2% in the last hour. BNB up 1.5%. But what I want to do is take a look over the 30-day change. And I'm going to toggle this to get the top-down approach and look at that. Ethereum Classic, 156%. DeFi, Yearn Finance, DeFi.money, 138%. BTG 107, Curve 105. Go down. There's Mithril. Mithril's been around since January 2017. I remember their launch, 102%. Polygon Matic, which really had a powerful first half of the week, 87% up. Uni 75, and Yearn Finance at the bottom there at 69%. So, one of the things that really one of the things, Doug, really about this whole reset, so to speak, as we went at the end of June into July and everybody thought the world was going to stop turning, is if you had dry powder, this was, perfect timing. More money, more gains percentage-wise in the last 30 days were made now than they've been made in going back 10 months. What would you say to people? Is this really where, when it comes to the everyday investor, where that DCA mentality really plays in?
Well, they say in life, it's never a great time to get married, to have a kid, and probably never a great time to invest, right? You can't pick the tops or the bottoms, right? And that goes to speak about, DCAing, which you've talked about, right? You're never going to pick the market bottom. When we were down to 17,000 or so that day on ETH, I think that was a Saturday, about a month ago. Yep. Everything was just looked awful, right? And you're like, wow, people on Twitter were like, yeah, this thing's going to 8, right? There's no way you would have said, wow, this is a great opportunity here. But again, that's why you kind of go in with a little bit of dry powder, like you said, and you go all in. If you're on this program and you've been following us, you know that we believe in the technology and where this is going. There was a report out about an hour ago from Deloitte. They polled 2,000 senior executives. 75% of those said that they will be adding cryptocurrency as a means of payment for goods and services. That'll be stable coins or any type of crypto within the next 2 years, right? So this is not going anywhere, right? Obviously, there's going to be winners and losers, but the technology is real. There's been some challenges over the last month, but the crypto markets as well as the equity markets have settled down now. S&P is up 8%, best month in 2 years. Like you said, though, where are we going forward now? Now there's almost like an information vacuum, like Nick talked about yesterday. We have no Fed meeting until a decision, I think, on September the 21st. Earnings season's over. Not a lot of catalysts. We have the ETH merge in September, but there's kind of a vacuum there. So now what happens? Do people take profits? Do we fall back? We saw where the signals were on the charts. ETH was around 1250, needed a break above there, and it did. And on BTC, it was 21.5, right? So now we're above those. So I certainly wouldn't be bearish at this point. You might have some pullbacks, but I think the market's a lot healthier than it was. But now everybody sits on their hands, right? As our government said yesterday, we're in a transition period for recession. They like to use the word transition, transitory transition. So now we're in a transition again, right? We're transitioning between a bear market and a bull market, and was this a bear market rally? I don't know. We'll see what the transition is. Maybe we're transitioning back to a bull market again. So,
well, it's interesting because there's obviously, and here's the Bitcoin versus price chart for the last 7 days. You can see how sentiment in the red started out the week and just completely did a reversal, flipped over, and went green. Oh, put this in perspective. Take a look at Ethereum. So you see how the bullish nature of sentiment just, engulfed the end of the week there. And we were showing Ethereum down below 1,700 now, which you have some profit takers coming out of the market. But the thing, really is, the definition of recession has been up in the air all week. People talking about contagion, and hey, we're 80% done with contagion. We've had the big players get knocked and beaten up: 3AC, Celsius, Voyager, Vault. Crazy report coming out today from Babel Finance, or on Babel Finance, in regards to, which is a lending company out of India. The report is stating that $280 million of their money, customers' money, was lost based on them trading it. So
that's insane.
That's what needs to get cleaned out of this damn market.
Yeah.
In order for anybody who's halfway an adult to take it seriously, that is just insane. And you wonder why, last year, every week, India bans it, India approves it, India bans it. That's what countries think. That's their own blanket regulation that's happening, and boom, somebody got caught.
But like Patrick just mentioned in the chat, like when to take profits, right? So again, if you had gone in recently and these are short-term trades and that was in your tent, then you don't get piggish here, right? ETH was around 1,000 to start the month, and went to 17 and change, right? Like that's a phenomenal return. Like, Are you waiting for it to go to 4? Then that's not a trade, that's an investment. So you always need to kind of frame what your thesis was going in, right? If you're buying this for, as we spoke about 2 months ago, generational wealth, these might be opportunities here for generational wealth, right? If we're going to 100K. If it's a short-term trade, you probably don't want to get piggish here. You probably want to take a profit. And then, wow, if it goes to 15 in the next month and a half on some more fallout, we still don't know what's going on with Coinbase and some other big firms out there, right? There might still be some smoke out there. So then you maybe take profits here and you say, hey, I hope it goes to 15, right? Well, so then I could really clean up. So
the simplest way to put it, when it comes to my mid and long-term holdings, are the generational wealth, right? So there's Bitcoin, there's Ethereum that I don't plan on touching. I wish there was a way where nobody would tell me about it. I could forget about it for 10 years. Then there's my midterm, which is for opportunities like this, right? So let's say I took a chunk of money 30 days ago and I wanted to split it up. I put half in for my long-term earnings, and I put half in for my midterms, knowing that we're going to have ups and downs as we go back up or correct. So the easiest way to gauge yourself without getting caught up in the greed gene, as I call it, is you say, hey, Patrick, let's say you have $1,000 and you're like, it would be really great if I could turn this $1,000 into $1,500 in a week. I feel there's a lot of market movement there. Well, when your trade goes and you have profits of about $1,500, keep to your thesis, as Doug says, pull out. The problem that people get into when they look to take profit is they say, well, crap, it hit my mark. Well, did you not expect it to? You made that mark, right? But once it hits the mark, then you're like, well, maybe I can double this. And that's when people will get disappointed, because now you're playing against a market that is not your friend. And sure, it could go up more, or you could lose all that profit and be down to your principal $1,000 and say, damn it, I should have taken it.
Always. And the thing here too, Alex, just with where we're at in the markets, it has been kind of devoid of negative news in the last 2 or 3 weeks, right? And then today it started to get, like you said, with this bobble news, right? So that's now almost news back on cycle, right? Bad news back on. At least that's starting that. So that's not really the best sign. What scares me, I know that Kathy Wood gets a lot of crap, and ARK has not been great at what they've done. But for the most part, she's not been great because she holds on to everything, right? And she's been getting crushed. Her Coinbase position, she was stacking in May, and she just sold all of that this week. That is interesting because, again, she's been riding stuff saying 5 years out. She totally puked out the whole position. I don't know what she knows. Again, there's some SEC stuff there and stuff. But that is disconcerting that she puked out. And if Coinbase should have some trouble, that is, they are the 800-pound gorilla in this space, right? So that could take us to new lows if there's more coming.
Listen, I wanna just say something. I don't want to create any FUD, but
Sure.
Doug is absolutely right. Right. So listen, if there was anything that happened to Coinbase, that would set back crypto for a number of years. Okay, and we're not saying there is, but what I will say, and we'll find this out as years go on of this great what we call crypto 2008 collapse, is that there's going to be a lot of firms out there that have strong balance sheets or balance sheets that may not be penetrable with a certain amount of loss that haven't reported anything. You're going to have companies that are going to say, nah, we didn't have exposure to 3AC or to Luna, and maybe they lost $500 million. But why do they do this? Because they don't want to add to the contagion. If they're healthy enough to keep going on, do not put it past a company to say, not we didn't lose any money when they lost a bunch of money. So you also have to remember all those players that aren't coming out and being quite truthful. And I'm not saying that's a bad thing. I'm saying if they can handle it, it's probably a healthy thing at this point, a healthy narrative for them to do that. But do keep in the back of your head that has been happening. All right, so we got earnings that came out today, and one of the two that were really being looked at that came in better than expected was Apple, and that was that was really, I'm not going to say surprising. The right word's exciting. And the other one was Amazon. So these two large companies, when it comes down to us, do they affect the market? Yeah, they do. They do affect the market. And does the S&P affect Bitcoin? Yes, it does affect Bitcoin and the rest of the cryptos. But what this does more so than anything with the retail investor is it creates happiness in your head. When you hear of these companies coming in after such a crappy week of everybody missing EPS, this creates happiness and it creates stability. And
well, what do we have in the acronym now? We had FANG, so we took out Facebook, and I'm going to mention them in a second. Their chart is really awful.
What do we call them now? Do we call it Mang?
I don't know, but Netflix is in the garbage can, kind of, right? And then Google is Alphabet. So we just have AA, basically Apple and Amazon. So what are we calling this? But bring up, if you can, Alex, a chart on Meta. I mean, that's basically 5-year lows now, or no, 5-year prices we're going back to at this point. Goes again to Patrick's point, right? Like, what was your intent? If you bought Facebook, the 150s, and it goes up to 380 and you didn't sell, what were you thinking, right? But you look at it now and it's like, that's an interesting stock because that's either a phenomenal buy here. I know they're spending so much cash on the metaverse, but that's either it's going to stop here because, again, it's at 5-year price point, or that's going a heck of a lot lower.
Yahoo stinks.
I know. Your real-time charting software is making us look bad.
It's not.
But anyway, folks, take a look at Meta. It's actually compelling from a chart perspective. It went from 386 down to the 158 area now, and I think 152 is the 5-year lows. So speaks to what they're doing and maybe some missteps there in terms of.
All right, we're back with TradingView.
Fantastic. But if you can click on a 5-year, what year is that time frame? Is that a 5-year? Yeah, you look at that. I mean, you go back 5 years, basically. You haven't made any money.
We're back where we started.
Yeah, it's insane. Think about that. Like holding on to something for 5 years. You could have made money in cash and done better.
In granny CDs.
So
no, it's an interesting point to bring up. That's why I'm really happy with the good news with coming out of Apple and Amazon, because and funny enough, before we go into the next topic, what did the market do with the two large companies that reported better than estimated earnings? It started going down. What did it do the last 2 days with crappy earnings and missed estimates? It shot through the roof on the crypto market. So it's a little bizarre. All right, moving on to the next thing. FDIC slaps bankrupt lender Voyager over deposit insurance claims. Now, this was probably brought up. Well, this was brought up a long time ago, right in the beginning. Remember when I had Mark Lopresti on when Voyager filed for bankruptcy? The number one question from everybody was the FDIC insurance. And I think it's been cleared. I think enough people, held Twitter spaces and explained it out properly. I know Mark Lepresti did on the show on all that concern. But nonetheless, there was a lot of people who pointed out that Voyager may have misrepresented exactly what the FDIC was, and in as it pertained to them. And so maybe that was all the confusion. But it turns out that there was a little confusion because the FDIC did an investigation, and they sent this letter right here to Voyager, dated the 28th. So here they have they allege that they've made false and misleading statements directly or by implication concerning Voyager's deposit insurance, and they cite that the law is anybody FDIC prohibits any person from representing or implying the uninsured deposit is insured. It does recognize that MCB is the bank where there's that omnibus custodial bank. They call it the FBO account, for benefit of, and that's all of the customers, ourselves included. And it says that it during its investigation, it determined that various misrepresentations online, including its website, mobile app, social media, etc., suggested that Voyager itself was FDIC insured, and that these were false and misleading representations. And they go on to the next line to say that these representations likely misled and were relied upon by customers who place their fund with Voyager and do not have immediate access to their funds. So I would say that line is probably the most important takeaway from the letter, if that's how FDIC is feeling, and that's this is a federal body. They then demanded that Voyager shall immediately, fix everything that they did wrong, take statements off of social media or their websites, and they have 2 business days from the receipt of this letter to confirm that they did so. I feel like it's a little after the fact. It almost hurts me as a Voyager depositor. It almost hurts me that they even just sent the letter now. They should just not even have sent the letter. If they didn't send it before it happened, what's the point of sending it now? What are your thoughts, Doug?
Well, it begs the question, did they know that they were doing this, right? Because the intermediary, the bank that stood in between Voyager and the FDIC is Metropolitan, right? So, what did Metropolitan convey in any of this process, right? The FDIC probably just became aware of this. I'm not defending them, but maybe they just came aware of this recently when they were fielding all these phone calls, right? And they're like, wait a minute, who is this Voyager? And why are they putting, on their marketing materials that they're FDIC insured? So I'm going to give them a little bit of a pause for that. I will say this, though, it brings up some larger questions. If you go to the bottom of that letter, it says that Voyager has 2 days to respond. But even regardless of what they respond to or say, it still says that they may be open to further actions by the FDIC. What does that mean? Again, we could speculate all day. That could be civil, that could be criminal. How does that play out in terms of Voyager? Everybody's been frustrated because they're hiring this high-profile legal firm, which eats up obviously fees, and that may eat up people's potential to get back, their pro rata portion of bankruptcy. What does this mean fighting the FDIC? And if there's fees, again,
say it's a
we hate uncertainty. And this is just more uncertainty, quite honestly. And no, we didn't want more uncertainty. I think going forward into next week, the August 4th bankruptcy, we wanted clarity. And now this is a little bit more of uncertainty. So.
Well, I think, August 4th is going to be interesting. Every court date's going to be interesting, and I know Celsius is, they just went through their first court date or their second court date, so to speak. And so they're lagging a little behind the Voyager process. But I don't see this being really a big deal at this point. I think if they do come back and decide to do anything, it's going to be a small little fine. I would probably venture to guess it's 50-50. They do nothing, so, but we just want to get this out of the news cycle Christ's
Yeah.
sake. Jeez.
And I think too that, you know, if you're a Voyager customer and you love the platform, there's I guess a sense of loyalty, right? Because you like it and whatnot, and you'll give them passes up to a certain point. But it's ironic for you and I, we've never used Celsius. And so you and I hear this Celsius news and we're like, well, we would never use those guys, right? So it's the opposite. If you're a Celsius customer and you've never used Voyager, you're going to be like, wow, I'd never use those guys with all the stuff that's going on there. So again, there's kind of a comfort level, and you give people a pass and a pause up to a certain amount. So we'll see how many people stick after this, obviously. So.
Yeah, and you know, if you're here, please hit the like button. If you're new, subscribe. That'd be very appreciated. I do want to just circle back to everybody who missed the opening, to let you know what we started the show with. Jim's Philly cheesesteak, very famous, one of the most famous Philly cheesesteak in all of the world, has been on fire all day. And we're really sad about it. We love to eat there. Best Philly cheesesteaks in the world. So, you know, we hope the restaurant gets through it. It's a legend. I mean, it would be like any other legend.
Have you ever gotten them shipped to you? Are you like Frank Sinatra? He would get pizza shipped to him from like New York or something. Have you ever done that?
Not down to the Caribbean. They won't quite make it. But I have taken the high-speed Amtrak chain from Manhattan to Philadelphia to have them for lunch to come back.
Really? I knew somebody once, they took their wife, she wanted Chinese food, so he flew her to San Francisco for the night.
All right.
That's kind of cool.
When Doug starts speaking like this, we know the top is in. Guys, thank you for joining us. Really appreciate it as always. We'll be here on Monday. Nick couldn't join us today because all the crypto went up anyway. So everybody made their profits. There's no point in doing TA. But actually, he's driving a U-Haul across the desert on the West Coast, moving. So we wish him luck. We hope everybody has a great weekend. Thank you very much. We appreciate it every time we see you in the chat. So
enjoy the weekend,
talk to you guys later.